Hello and welcome to the Mango Monkey Show. Today we will be talking about whether you should be buying a property with an auction. Not everyone can buy a property or should buy a property under auction conditions. The reason is that with auction conditions, you are waiving your cooling off rights. Under the law, a property buyer has a cooling off period of 5 business days in New South Wales, in Sydney. However, this is waived automatically if you purchase the property on the auction day. So should you buy that property under auction conditions? It works for some people but not for everyone. In this video, I will go through some reasons where you may not want to buy your property under auction. Reason number one is if your deposit is very small. I recommend you buy under auction conditions only if your deposit is at least 20%. The reason is that when you buy a property under auction, when you need to get your home loan from the bank, even though you have been pre-approved, the bank will still need to do a valuation of the property. The bank will appoint a valuation company. Usually it is assigned at random. The valuer will normally inspect the property that you are purchasing and they will assign a value to the property. The valuer will ask for your contract of sale so they know the actual price that you purchased the property for, and they will usually try to match the valuation figure to the actual price that you paid for the property. However, this does not always happen. If let's say you purchase your property for $600,000 and the valuation company only assign a value of $550,000, that means there's a gap of $50,000. If your home loan was approved with 20% deposit, normally what this means is you need to contribute 80% of the shortfall, which is 80% of $50,000, which is $40,000. If your home loan was approved with 90% deposit, you will need to contribute 90% of $50,000, which is $45,000. Apart from this one single figure on the valuation report, the valuation company will also provide some commentary. It could be some risk ratings regarding the market direction, the environment, and how long it takes to sell the property. Sometimes the valuation company also comments on certain issues in the building. For example, if it is an apartment building with cladding which has not been certified to be compliant, there is a possibility that the bank will not accept the property as the security for your home loan. If it is a house, sometimes the house has a pool. The pool may not have a fence, and you may actually need a fence to be compliant with safety standards. In that case, the bank may require you to either put a fence around the pool or to at least get some quotation and prove that you have the money to be able to fix the pool without having to rely on a bigger home loan from the bank. Another example, if it is a house, is that if it has a granny flat, sometimes the owner may have put the granny flat without actually getting council permission. This may be an issue when it comes to getting your home loan approved. What can you do if the vendor, the seller, wants to sell the property at auction? You can make a pre-auction offers. This is where you tell the real estate agent that you want to buy the property before you go into auction. You can tell him or her that you do not want to risk having zero cooling off period. Perhaps explain that you are buying the property with less than 20% deposit. Usually you would want to make this pre-auction offer a few weeks before the auction date, because when it is very close to the auction date, the vendor might as well go into the auction. You will also need to make an offer which is substantially bigger than the auction guide. For example, if the auction guide is $600,000, you may want to make your offer at $650,000 to convince the vendor that it is not worth it for them to go into auction, because the next offer may be lower than yours anyway. When you make an offer, you should try to put a deadline. For example, you can say that your offer is valid only for 1 week. That way the vendor doesn't hang around to your offer for too long, and it will hopefully avoid competition. In New South Wales, an offer is not legally binding unless when you make the offer in the email, there is something that indicates you are actually intending for that email to be legally binding. If you want to make sure, you can write a small line on your signature in your email saying that your offer is not legally binding and no contractual commitment arises until the exchange of the contract of sale. Of course, get an advice from your solicitor to make sure that you are following their guideline. If you want to make your offer a little bit more sweet for the vendor, what you can do is you can waive your requirements for a strata inspection or a building inspection. You can perhaps do the building inspection first, pay for it first, so that the only condition on your offer is that you could get the finance approved. When you buy a property with less than 20% deposit, you would need to pay for lender's mortgage insurance. Apart from having to pay extra, the bank actually needs to get an approval from the insurance company. So even though your home loan has been conditionally approved, the insurance company normally only looks at your application at the final stage. So what this means is that they may pick a couple of little things on your home loan application, which the bank didn't have any issue with, but the insurance company has an issue with. Therefore, it is possible that you will need to put in more deposit so that it goes out of the LMI scope. This will be the case regardless of your income. Even if you have a shitload of income, you may still need to put in 20% deposit if the insurance company does not like your application or the property that you are purchasing, which you will only find out after you win the auction. If you found this video useful, please hit like and subscribe. It really does help me a lot, and I'll see you next time.